Every Wednesday morning at this time, we partner with our friends at DunnCox Attorneys at Law, where we look at various topics in the legal landscape. Today's topic, regulating microcredit institutions. And, we want to begin this morning, before I even introduce my guest and welcome my guest, to really give you a little bit of a background information. So in January of this year, the legislature passed the Microcredit Act. Senator Kamina Johnson Smith, however, stated that the purpose of the act is to discourage microcredit institutions from lending money at excessive interest rates that are not justified by the risk, and to sort of outlaw predatory lending practices, among other practices. Some individuals have been in strong support of the new law, whilst others say it was rushed through Parliament and will have a great impact on the microcredit industry. Well, joining us this morning for a discussion on this microcredit situation, we have with us an attorney at law and associate in the corporate and commercial department at DunnCox, Kelly Akin, who is our very special guest on the telephone. Good morning, Kelly.
Hi, morning, Richie.
How are you today?
I'm good. How are you?
Not too bad at all. Thank you for joining us for the legal landscape today. First of all, Kelly, what is the purpose really of the Microcredit Act?
All right. Well, Richie, your summary was actually pretty on point. I'd say over the last 20 years, there's been an increase in the number of privately owned money lending companies.
Mm-hmm.
These companies tend to serve micro to small/medium businesses. So it's really that significant increase that has highlighted challenges with using conventional means of regulation. I mean, in addition to challenges with regulation, the microcredit companies tend to apply for exemptions under what is currently the Money Lending Act.
Mm-hmm.
And that is an act that would have ordinarily provided some sort of protection and recourse for borrowers.
Mm-hmm.
So what I'm really saying is that there's two main purposes. The first purpose would be to create a regulatory framework for those type of companies, and that includes setting up a regulatory authority that will develop standards, issue and monitor licenses, and impose penalties if necessary. And the second purpose is to bolster that protection for consumers that transact business with those companies.
Mm-hmm. Before we go any further, I'd like to get an understanding. What is a microcredit institution and what type of services do they offer?
Right. So a microcredit institution is a type of money lending company. They usually offer small loans to individuals or, like I said, micro/small to medium-sized businesses. And the Act really does set out a monetary limit for each of those types of businesses to give you a definition. These companies are known to actually cater to persons who may not be a part of the traditional banking system or aren't able to meet the criteria for most financial institutions to get a loan, such as a bank.
Mm-hmm.
In fact, the surge in demand in this sector has actually caused some banks to look into offering micro-lending services in addition to their traditional products.
Mm-hmm.
In terms of services, though, these companies are known for payday loans, I think is a very common term. Small loans to cover a variety of individual expenses. But, over the years, like I said, it's been about 20 years where there's just been this surge. These companies now offer things like small business loans and prepaid card services and loan refinancing. So it's really, ballooning.
Mm-hmm. It seems that based on how they operated, it became a matter of concern for Senator Kamina Johnson, who described some of their approaches as excessive interest rates being used and so on, which kind of motivated this particular act in itself. Who does this act apply to?
Okay, so it applies actually to any company that provides quote-unquote microcredit services, and that's a defined term under the Act. So that covers the services I just kind of briefly mentioned, but more broadly, the Act defines it as any company that grants credit facilities or provides business advisory services to those individuals or small, medium businesses, and really any other action that the minister approves. So it's a very, very broad definition, but I think more importantly, it's to note that it's not every business that provides those services that I just mentioned falls under the scope of the Act. There are actually a very detailed list of exempted persons. I won't go through the whole list with you, but I would point out a couple of them. First and foremost, if there is a loan between private parties, so Richie, if I lend you money and it's not for commercial gain, that's not caught under the Act.
Okay.
Banks, generally speaking, they are exempt. Companies under Securities Act, building societies, friendly societies, those are, they're not trying to capture those type of institutions. They really are being very specific in who they are targeting under this Act.
What about consumer protection? Does the Act include any provisions that offer, shall we say, greater consumer protection?
Okay, yeah. So under the current regime, like I mentioned, the Money Lending Act, currently microcredit institutions would be governed by that Act. The problem, as I mentioned to you before, is that microcredit institutions often apply for an exemption, and that exemption usually allows them to charge higher than normal interest rates. So that's typically what obtains now. In addition to that, there is a general consumer protection under the Consumer Protection Act, but it's very broad and it doesn't specifically address these issues. This new piece of legislation seeks to put in place several safeguards for consumers/borrowers. Firstly, the Consumer Affairs Commission will now be working and cooperating with the regulatory authority for microcredit institutions, and they will investigate any complaints and breaches under the Microcredit Act. The Act also requires these companies to provide borrowers with a loan agreement, which must meet certain minimum criteria under the Act. I mean, they have, I think, maybe about 7 or 8 points that, those points have to be met under the loan agreement. Very importantly, the loan agreements, the language must be very clear and unambiguous. Technical language should be avoided, but where it is unavoidable, a simple explanation must also be included. Interest rates are now going to be based on market forces and an assessment of risk as it relates to that specific borrower. And interest rates and penalties are to be calculated based on the outstanding balance of the loan and not the total loan that was taken initially. Okay.
Those are important, very, very important matters being discussed there. Now, I want to ask you, Kelly, are consumers able to make complaints about the microcredit institutions, and who can they speak to? What's the process that's involved in making a complaint?
Yes, they can absolutely make complaints under this new legislation. There is a specific process for complaints. The borrowers will make a complaint to the Consumer Affairs Commission. The complaints are to be made in writing. That's really the only criteria under the Act, but my suggestion would be to, of course, include important information such as the loan agreement, any sort of documentation between the borrower and lender, and, a detailed description of the events that led to this complaint.
We've learned a lot by your presentation this morning. We thank you. And before you go, Kelly, could you give us your hashtag Did You Know tidbit for this morning?
Well, I think really importantly, I don't know if a hashtag, it's going to be a long hashtag, Richie. Importantly, it's that interest rates are now really tied to a sort of market value under this legislation. And I think that's important for the consumers out there.
Very, very important. We thank you so much for the information you shared with us, and we wish you a wonderful day.
All right. Thanks, Richie.
Thank you so much. Great talking with attorney and associate in the corporate and commercial department at DunnCox, Kelly Akin.